Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor. We're really pleased to have Ryan King with me. He's the Senior Vice President of Capital Markets and Strategy for Equinox Gold. Reasons I wanted to interview Ryan was because, first of all, I have a very positive view of Equinox. I think the market isn't really treating it fairly at this point in time. I believe it's undervalued. Especially since the merger with Calibre, the Calibre Mining, which I had been following in my newsletter for a number of years and watched the progress of that company under the leadership of Darren Hall. Had done extremely well. One of the things that always impressed me about the company under Darren Hall, under his management, by the way, he is the Chief Operating Officer of Equinox now, that's my understanding. That's the case anyway. The thing about Darren Hall and Calibre was they always seemed to underpromise and overdeliver, almost always. It's hard for me to remember a time when they didn't meet at least their projections or supersede them. So that's one thing. And so I was really pleased to see them join Equinox, which I'd already started covering in my newsletter, but I think it's a much stronger company now. And I don't think that really the market understands a lot of the market anyway understands the value of Calibre and what they're bringing to the table. So I wanted Ryan, who also worked with Calibre, have him on to explain his views of the company and how they're, what to look forward to. I should mention, for the sake of full disclosure, I covered the company. I cover Equinox in my newsletter. Mrs. Taylor and I own a few shares of the company. We're not charging Equinox for this interview. I just simply wanted my subscribers to hear the story and also the larger audience to hear a story, which I think is very undervalued. Before I say hello to Ryan, I should tell you the stock trades in Canada, EQX, and in same symbol under the New York, where it trades. 759 million shares outstanding. Ryan can correct me if that's not right, but I think that's approximately right. Recent price in US money about $6.23. If my calculator works, it's 4.7 billion in market cap. So it's not the kind of baby company we cover most of the time in my newsletter, but we're in a mature bull market now. And I think there's going to be an awful lot of profits to be made by the guys that are producing the stuff, especially with the margins that are there now. So with that said, let me welcome Ryan. Thank you so much for joining me, Ryan.
Well, thank you for having us, Jay. It's always a pleasure to come and speak with you. I know you've got a lot of different speakers that come on, and you interview a lot of people. So a breadth of information comes through. So it's a pleasure to be here.
I was just saying in the introduction, I wasn't all that crazy about the merger. I was just really very happy about Calibre and how well you were doing there under the leadership of Darren Hall. And the company was doing very well in Nicaragua, and I was a little bit hesitant about Nicaragua initially. But boy, you got along with the people. You did the right thing by them in difficult times during COVID, as I recall, and it's worked out very well. And obviously, as I just said, almost always over-delivered, which is something that's not all that common. But how does the merger here now benefit Calibre shareholders? I'm looking at it from my point of view in the past, and I think other people might have felt that way. Indeed, you had to sweeten the deal. Equinox had to sweeten the deal in order to make the merger happen at the end, which I was happy about. But just tell us what are we looking now with Equinox, and maybe start out with, I think, the flagship, obviously, of Equinox, one of two. I see Greenstone as one, and I see Valentine, which came over with Calibre, as the other. But what does the combined package provide for investors that Calibre couldn't provide in its own?
Absolutely. No, Jay, thanks for bringing up some of those key points. Really important to highlight, I think, what you brought up, what Calibre brought to the table when we first became a gold producer, right? If you recall, back in 2019, the company Calibre Mining was an exploration development company with some exploration assets in Nicaragua. And we were able to strike a win-win deal with B2Gold, where Calibre took over all of B2Gold's assets in Central America. So we took over El Limon property, the mill and mines, the La Libertad properties, the mills and mines, And at the time when we took those over, if you recall, gold was actually trading around $1,200 an ounce.
Mm-hmm.
We went out and raised 100 million Canadian dollars at the time, because the deal was to pay B2 Gold in cash and shares.
Mm-hmm.
And at the time, I think the assets combined in Nicaragua had about 100 to 120,000 ounces of reserves
Yeah.
and resources.
Uh-huh.
And at the time, the La Libertad facility and complex was heading towards closure.
Mm.
And it was heading towards closure because it had run out of resources on the property,
Uh-huh.
right? And so unfortunately, that would have led to a significant change in the workforce there. A lot of people would have had to been laid off. There would have been a totally different trajectory of the company.
Mm-hmm.
But fortunately, the introduction of Darren Hall came into the story. He'd been analyzing the assets for some time. Recall that Darren, myself, Blaine Johnson, Doug Forrester have a track record, and that was starting Newmarket Gold,
Mm-hmm.
discovering the highest grade
Right.
underground gold mines in the world at Fosterville, merging that company with Kirkland Lake, and it went on to do tremendous returns for shareholders and create a lot of wealth for
Yeah.
shareholders. So people were paying attention to the Calibre
Mm-hmm.
early on, but really couldn't see how value could be created. But Darren come in as CEO, and if maybe some of the viewers don't know this, but Darren has been in the mining business for over 40 years.
Mm-hmm.
He spent 30 years. He's a mining engineer, but he spent over 30 years with Newmont, working through and optimizing assets all around the world
Uh-huh.
for Newmont.
Yeah.
In Nevada, he put together the Quarry Complex. This is an interesting one. He then got moved over to Peru. While in Peru, Newmont. This is sort of mid '90s. Newmont acquired a small heap leach mine that was producing somewhere between 30 and 50,000 ounces a year, and Peru was not an easy place to work during those
Mm-hmm.
times. Right, and ended up under Darren's stewardship and leadership, that asset went on to become Newmont's crown jewel, producing well over 1.5 to 2 million ounces a year
Wow.
in what's called Minera Yanacocha. So a
Wow.
tremendous
Yanacocha,
asset,
sure. Yeah.
all under Darren's
Yeah.
leadership. He then went on to Indonesia to operate Batu Hijau. Went on to optimize and fix some of the berthing issues of Boddington, the big asset in Australia.
Yes.
So when he left Newmont, he was overseeing about 15 to 16,000 employees,
Uh-huh.
7 or 8 of their main operations around the planet, Asia Pacific predominantly. And that represented about 50% of Newmont's EBITDA.
Mm. Wow.
Right. So Darren brings a significant amount of experience and expertise in looking at assets from a different perspective and applying a slightly different approach to see what could be done to, squeeze a little bit more juice out of the lemon,
Really incredible.
optimize the
Yeah.
assets, whether that be with putting different people in roles,
Yeah.
clarifying responsibilities and
Mm-hmm.
accountabilities. All of these types of things lead to the unlocking of value. And so when we look back, what did he do with Nicaragua? He employed, and it evolved, but employed a hub and spoke, meaning there's numerous satellites being the mines.
Mm-hmm.
And instead of installing new mills or hubs at each one of those locations around Central America and Nicaragua, what we did was we employed a hub and spoke. So we mined in one area and hauled it to one of the mills for processing. And that led to a 20% year on year production growth, and it
Mm-hmm.
ended up leading to obviously significant increase in operating cash flow, what allowed us to then reinvest in exploration and development. And through that period of time, we grew the reserves over 350%. So
Yeah.
at the end of 2024, Calibre had a little over 1.1 million ounces of reserves on the books, but had already produced 1 million ounces of reserves. So of
Yeah.
ounces.
It was very impressive, and I have to ask, this is probably a discussion for another day, but how in the world did Little Caliber get to Darren Hall? I mean, if he was having that kind of success at Newmont,
Mhm.
obviously a very talented man, very operationally. I mean, obviously to be able to think outside the box and do things differently, and I mean, he just seems everything he touches turns to gold. That's so far what I've seen with Calibre, and now he's with Equinox. So, my goodness, he has a chance to do a lot of things because Equinox has a lot of, I guess, 7 mines in production. Perhaps we'll go into that, I hope.
Well,
But how did he come? You said that he was aware of the assets uh, that that Calibre had before he joined you. Obviously, he would be, but how did you
we
get him? I guess that's my question.
Yeah, no, that's a great question because he's significantly in demand. But working with Doug Forster
Mhm.
and Lane Johnson on the Newmarket transaction,
Mhm.
where Darren came in as chief operating officer with Newmarket, helped to align the organization, become more effective and efficient. That relationship began back in 2015.
Mhm.
And because of the outcome of that,
Mhm.
i.e., there was significant share price return and financial benefits that came with that. He felt that he had a level of, and I'm speaking on his behalf, but that he had a level of trust with those two individuals that
Mhm.
have created like both Doug Forrester and Blaine Johnson have created significant wealth.
Yes.
People that have invested with them over the years. Terrain Metals, I think you recall, was another one of their
Sure.
companies,
Yes.
the Mount Milligan project in central British Columbia. So
That
uh,
wasn't an easy project either.
no, but a big copper gold porphyry mine in
Right.
central BC that we took through the numerous drilling, economic studies, and permitting in British Columbia in Canada. So it ended up doing very well for shareholders over time. Anyways, my point is that I think Darren latched his wagon to the two key individuals that he worked
Uh-huh.
with. He brought a tremendous skill set. They had a skill set, so it worked well together.
Right.
And that's where we utilized Darren's expertise to look at these assets in Central America during the due diligence time.
Mm.
And during that period of time, he was able to kind of understand what could be done with these assets in Central America. So ended up doing very well for shareholders, but being the core asset and the only asset within the company, we believe that the best thing to do for our shareholders was to start diversify. We then bought a small operating mine in Nevada,
Yes.
and then we evolved into becoming a significant diversified player by buying and acquiring Marathon Gold
Mm-hmm.
in Newfoundland.
Mm-hmm.
So this was on a great trajectory and a path. We believed that there was a lot of upside opportunity within the company,
Mm-hmm.
and we were on a great path to become a 500,000 ounce a year gold producer.
Mm-hmm.
And that's when the Equinox deal came along.
Uh-huh.
And when we step back and we look at the portfolio that is in Equinox Gold. Ross
Uh-huh.
Beatty, Greg Smith have done a tremendous job of acquiring quality assets. And we believe there was an opportunity there. And unfortunately, if we look at the history of Equinox and kind of, Jay, you said it to begin with at the beginning of this interview, is that you were a little disappointed that we did this deal because Calibre was on a great trajectory. You had
Yes.
trust in the company, you
Right.
believed and had confidence that they were doing a good job, and it was being reflected in the share price.
Mm-hmm.
So a little disappointed. Now, typically I'll ask people, was there disappointment in what you got or the partner that we merged with? Because
Uh-huh.
oftentimes I'm hearing, well, it was probably the partner that we were merging with, because the track record wasn't um, as well known or had a strong conviction
Mm-hmm.
on the delivery piece. For right or for wrong, or there's things that come up,
Mm-hmm.
but Equinox had a track record that didn't deliver on
Mm-hmm.
some production and the cost outlooks and the growth profiles that they had been working towards, and so there was some disappointment amongst the market.
Right.
And I think that that was pretty common during this transaction. But in fact, Jay, that's actually the opportunity as
Mm-hmm.
well,
Mm-hmm.
because the portfolio is fantastic. And when we look at the combination, we look at not only the enhancement of asset quality and jurisdiction,
Mm-hmm.
but the combination of management as well.
Yeah.
So we believe that collectively together, we can unlock a lot of value. It's going to take some time to work through all the different aspects, But the company has and is starting to transition to more North American kind of centric
Sure,
assets.
sure.
But and we can talk through all the details, but
Yeah.
I'm very, very excited about the opportunity in front of us because when we did this deal and we look at again, the Equinox portfolio, the net asset value that it was trading at presented a very compelling opportunity.
Mm-hmm.
And it's going to take some time to build up that confidence.
Mm-hmm. Mm-hmm.
And part of it is what we've just recently done. Equinox reset expectations,
Mm-hmm.
and in July, early July here, we put out the Q2 production results, and we had we really made sure that based on all the analysis that we met expectations. And so far, analyst reports coming out of that on the back of that July 8th news release
Mm-hmm.
met or in some cases beat
Mm-hmm.
expectations. And I'll be honest here. It's a short period of time, but
Sure.
I think it's setting ourselves up and managing those expectations appropriately and accordingly, such that we can meet or hopefully beat some of those expectations, and then start slowly building up the confidence for shareholders to look at Equinox as a reliable, quality global gold producer. And I think there's a tremendous opportunity for share price returns on that. And it starts with, as you said, Jay, you brought up Greenstone,
Yeah.
right? And I think this is an important piece of, well, if not one of the most important pieces of the portfolio now, is the Greenstone
Sure.
asset located in Ontario, which is ramping up its production profile. In November, I believe, or Q4 of last year, it announced commercial production
Mm-hmm.
from. And so this year on revised guidance, it's going to be 220 to 260,000 ounces this year.
Mm-hmm.
And it's a process. As I mentioned at the beginning, Darren has been involved with numerous large uh, open pit operations around the planet.
Mm-hmm.
So he knows what good looks like, and he understands what it takes to get things through that process and optimize the asset. So I feel very confident in his ability to ramp this up, and we'll see mining rates increase, we'll see milling rates increase,
Mm-hmm.
and some efficiencies throughout the second half of the year. I'm quite optimistic on the second half of the year. It looks quite promising.
Mm-hmm.
Similarly, in Canada, we've got the Valentine gold mine. So Valentine is on track for first gold at the end of Q3. It is on track for ore, so rock going through the plant in the second half of August. So we see good opportunity with regards to delivering that product now. And during the fiscal 2025, we'll see somewhere between 15 and 30,000 ounces come out in the second half of the year. And then as it ramps up to full nameplate capacity, we would expect that to be sometime around the end of Q1 of 2026.
Mm-hmm.
And if we step back and we look at where Valentine is now, we're pretty confident that the ramp up or the commissioning phase of Valentine is going to be pretty effective.
Mm-hmm.
We've got an excellent team in place there. The team there has a lot of commissioning experience. And you may not have known this, but we brought a lot of the operating team, the senior level operating folks in a year ago when
Mm.
we were still in the thick
Oh,
of
uh-huh.
construction,
Uh-huh.
so that they could overlap
Uh-huh.
and work with the construction team to ensure that we built a product that they can deliver and operate from.
Good. Yeah. Yeah. Well, there's a lot of moving parts in building a mine, that's for sure. What, I don't know if you've got some revised guidance, I guess, for Greenstone this year. What are the costs and production numbers?
So the revised
200.
guidance for Greenstone is
Yeah.
220,000 to
Uh-huh.
260,000 ounces of production this year.
Uh-huh. Right.
Right. And if we look at it, so far based on the disclosure we've come out with, we're sitting at about 95,000 ounces for the first half of the year.
Mm-hmm.
Right. And it's ramping up. So Q1, I think we were around 44,000 ounces. Q2, a little over 51,000 ounces. So we
Mm-hmm.
should start to see that cadence of increasing production profile
Mm-hmm.
go Q3 a little bit more, Q4 a little bit more, and then stronger in 2026.
Mm-hmm.
So as we work through all the different aspects of the mine, the mill, the operation, I believe that we're heading towards a much stronger H2 versus H1 in 2025. So the all-in sustaining cost guidance there this year is $1,700 to $1,800 an ounce.
Mm-hmm.
Now, a little bit of color on that. If we look at Greenstone on a spend perspective throughout the year,
Mm-hmm.
it's a little bit higher than what the original guidance was. Not much. Like we're talking $5 to $15 million higher.
Uh-huh.
But the big change is the denominator,
Uh-huh.
right? So think of a mining operation more or less as a fixed cost business,
Sure. Yeah.
right? And so if we, original guidance was 300 to 350,
Mm-hmm.
right? But if we look at the new guidance, it's about almost 100,000 ounces less than that.
Mm-hmm.
So
Mm-hmm.
that's going to have a significant impact on your all-in sustaining costs.
Absolutely. Your unit costs, right.
Yeah. So stepping back now, I think the life of mine average for Greenstone is around 300 to 350,000 ounces. So I anticipate, again, as we go forward, quarter over quarter, we should start to see an improving per ounce cost profile into the
Sure.
second half of the year,
Mm-hmm.
and which should lead to 2026 being a little bit even better than that, than the second half of the year.
Mm-hmm.
Right. So I'm pretty optimistic on this. Again, I've had the pleasure and sometimes the discomfort of working with Darren. It's business. It's never a personal thing with Darren.
Yeah.
It's always business. How can we make the product better?
Right.
And he'll get on people about roles, responsibilities, and accountabilities.
Yeah. Yeah.
And that's a very important thing in business,
Yeah.
to stay on task and to be focused on what you can and cannot deliver. And if there's an expectation, tell me about it. What's the timeline? And
Yeah.
it's just important for our shareholders and stakeholders to know that he's very focused on that.
Mhm.
And so, I think that's a very important aspect to somebody that is leading the operation. So Darren oversees the discovery, the exploration aspect, the sustainability or the environment, social governance. He
Mhm.
oversees the development of new assets as well as the delivery of the current production profile portfolio. So a big role, but one that he's done before. One that
Yeah.
he's done before, though, right? So
Yeah.
that's also an important aspect here.
Yeah.
And
Exactly.
so I'm optimistic about the second half of the year going into 2026 as well. I personally, and we've all been buying shares.
Yeah.
And I've bought some shares. I know Ross Beatty has bought some shares. Blaine Johnson has bought some shares. Darren Hall has bought some shares. We Self-interest is a great motivator, and
Absolutely.
we believe in what we're doing. We're owners of the product, and I think that's incredibly important. And it's helpful for new investors or investors to know that your management team is behind you and buying those shares as
Of
well.
course.
What we believe.
Absolutely. Yeah. Well, I mean, if you're all in sustaining costs, I think you said 1,700 to 1,800 now with current levels of production. Even so, you're blessed with a $3,000 plus gold price. So uh, give us a little sense of what that might mean in terms of margin. I mean, obviously 3,000 less 1,800, pretty nice margin. I can't remember those kind of healthy margins for the gold mining industry in recent years. So I would think
Yeah.
that I would think that Equinox, and especially if you keep ramping up production, things are going to look pretty good, better than the market is betting on now, I believe, for this
Yep.
year for Equinox.
Yeah, no, I think you're right, Jay. I mean, look, the Equinox product has been in a significant acquisition mode
Hmm.
over the last few years,
Yes,
right?
that's hard.
Now,
Yeah.
now there's a healthy portfolio of of quality assets. And as I mentioned, we've been in through the strategic merger with Calibre Mining, we've enhanced the portfolio
Hmm.
with more North American tier one
Right.
jurisdictional assets, which
Hmm.
I think is an important factor for investors looking at global gold producers.
Yeah, absolutely.
I'm going to use two as an example. Two companies come to mind. one, a senior gold producer, Agnico Eagle,
Yes, brilliant.
and two, a mid-tier going to an intermediate gold producer, Alamos Gold in
Yes,
Canada.
yes, also, yes.
Majority of their ounce production comes out of Canada. These two companies, investors would flock to their equity, and they have over the last 2 years because of certain key metrics. One, we talked about tier one jurisdiction.
Mhm.
Two, substantial long life assets, free cash flow, an operating track record, organic growth, and return capital to shareholders. So they've got a tremendous track record of doing that for their shareholders. Now I'm going to flip over to Equinox, for example.
Mhm.
So Equinox has been tiering up or enhancing the asset portfolio. So you've got, I think it's almost 60% of production coming out of North America over the near term, with
Mhm.
Valentine, Greenstone, Mesquite in the United States, a growth pipeline with Castle Mountain in the United States. So your tier one contributions are significantly increasing. All of these assets have substantial long lives, just like the Alamos and Agnico assets.
Mhm.
They're going to be generating significant free cash flow over the next from 25, second half of 25 through to 27. Kind of analyst expectations over that period of time is pretty significant. And then you've got this new operating team in place with the combination with Calibre. So
Mhm.
that, and again, we talked about this. The track record hasn't been perfect,
Mhm.
hasn't been great, but now with this pivot or inflection point with the teams and the combined management, that I believe is going to start turning around as evidenced by June and July's announcements from Equinox, right? A growth pipeline within the company is absolutely fantastic. There's a huge opportunity with the Castle Mountain asset in California, going through the phase two permitting process, and actually has been put into the Fast 41 process. If you
Oh,
recall,
yeah.
President Trump signed an executive order to advance and fast track assets,
Right.
critical metals in the
Uh-huh.
United States. Well, gold is a critical metal for the United States.
Yeah, it should.
And so we've been put in this Fast 41 pathway to permitting Castle Mountain, which could lead to 200 to 225,000 ounces
Wow.
of additional annual production. Don't know the
Mhm.
timeline on that yet, but we would anticipate the first half of 2027 when for that approval. So when you look at that, Jay, you look at Agnico, you look at Alamos as two companies, and
Mhm.
this is kind of the focus now. The focus has been acquiring a portfolio to get to 1 million ounce a year gold producer. Well, now the focus is high grading that portfolio to
Mhm.
create a very successful company that
Mhm.
has significant shareholder returns,
Mhm.
right? So right now, Equinox Gold trades at about 0.6 times price to NAV, which is a metric that is very well known in the mining space across analysts and precious metals investors.
Yeah.
Where right now Alamos Gold trades at 1.25 to 1.3 times,
Wow.
and Agnico Eagle, again, significant track record of meeting or beating expectations, trades at about 1.6 times price to NAV. And
Yeah.
I'm not necessarily saying that the analysts are correct or perfect on their assessment. This is analyst consensus numbers,
Yeah.
but they have a pretty good sense of what's going on because this is what they do day in and day out to understand these assets. So that I believe, based on those metrics, and I am benchmarking against two of the best,
Mhm. Sure.
right? But
Sure.
I believe that we have the portfolio and the team to deliver and become one of the top value quartile gold producers listed on the TSX and the NYSE because of the portfolio and the team. I really believe
Yeah.
that.
Well, I don't disagree with you. As a matter of fact, that's why I really I'm really optimistic about Equinox now because I've seen what Darren Hall and his team has done with Calibre.
Yeah.
And yeah, I mean the Valentine project I know has tremendous upside potential. What sort of production numbers are being projected now for Valentine when it hits full stride?
Well, yeah. So based on an older economic study and our internal reviews, Valentine at during phase one. So
Hmm.
Valentine was always going to be a phase one that runs a mill of running at a full nameplate capacity of 2.5 million tons a year.
Hmm.
So based on that, for the first few years, it would be about 190 to 200,000 ounces of annual gold production.
Hmm.
And very likely the all-in sustaining cost is coming in somewhere around $1,300 to $1,400 an ounce.
Hmm.
That the technical report that was produced in 2022, I believe, disclosed that the total cash cost and all-in sustaining costs would have been lower. I just believe that based on inflationary
Yeah.
pressures, labor
Hmm.
costs, all the reagents and inputs that we do
Sure.
use, we should couch it a little bit more conservatively,
Sure. Sure.
right? And again, this goes to the hopefully this a whole approach with under promising and over delivering
Exactly.
or
Yeah.
meeting expectations.
Hmm.
I think that's a good place to start. So, Jay, it's around that. So for 2026, after saying that, because we're still ramping up Valentine in the first part of 26, I anticipate somewhere between 150 and 100 and 200,000 ounces in
Hmm.
that ballpark. It's
Hmm.
going to be closer to the lower end of that, just because during Q1, um, we would anticipate still ramping up. And
Hmm.
of course, this is assuming no major hurdles or challenges during that ramp up phase. But one thing I'm optimistic on is the fact that Valentine is a greenfield site, so there's no
Hmm.
past production there.
Hmm.
Um, the mill is a pretty standard crush, grind, float CIL plant.
Yes.
And a significant portion of the gold actually report to the gravity circuit.
Hmm.
So I'm pretty confident that, given that kind of vanilla milling. It doesn't require, there's no complexities there. I think it should ramp up pretty well. And of course, the fact that the team has been there, the operating team that's going to be operating this asset has been there for some time and
Hmm.
have worked through a lot of the different construction, um, we'll call it issues that have come up over the last 12 months to ensure that they can have deliverability of the ounces when it comes to that. So that's the initial years, Jay, and then we're looking to go to a phase two. I would imagine that if all goes well, construction probably starts the second half of 26 to take it closer to a 5 million ton throughput.
Okay. Yeah.
And it's not a direct one for one correlation on annual ounce production because grade does dip a little bit.
Hmm.
I would expect somewhere between 15 and 20% increase in annual ounce output. So
Hmm.
call it, once that's done, somewhere between 220 and 230,000 ounces a year.
Hmm. So you're looking at something along 300,000 ounces at Greenstone. Did I hear you right on that?
Yep.
And another 230,000 at phase two.
Yeah.
Yeah, yeah, I mean, I just know that there's that huge structure, gold bearing structure at Valentine. It just runs for miles, kilometers, whatever measure you want to take. It's just huge. And I'm thinking, wow, this thing could get bigger and bigger. I could see the expansion. Now I'm dreaming like an exploration guy, right? So,
That's fun to
yeah,
do.
but what is great about Equinox is I think you have both. You're bringing both to the table. And okay, so things are really looking up for your two North American major uh, mines, but you've got more, you say, down in the U.S. So I guess those are real upside potential numbers
The
coming out of there. Yeah.
Yeah, no, it's very exciting because you're looking at somewhere between 500 and 600,000 ounces of production and talking about the upside opportunity.
Yeah.
There's upside opportunity in a portfolio like this. It's very significant. As we've said, we heavily invested back into exploration in Nicaragua, which has resulted in incredible new discoveries and very high grade. Valentine, we've talked about. We've already made a significant discovery at Valentine. At the end of 2024, we announced 172 meters grading 2.4 grams per ton gold in a brand new discovery,
Yeah. So I mean,
right?
there's going to be more gold discovered there.
I
You're
think
going
so.
to have more mineable gold discovered there, and so your production then from North America, I think you said 60% or so, probably even
Yeah.
now.
E- e- e-
Start.
e- Correct. If you took a view, and analyst expectations are right around the 950 to 1.1 million ounces
Mm.
on an annual basis going forward. So 26, 27 timeframe, something like that is, and that's not including any ounces coming from the Los Filos asset in
Yeah.
Mexico,
Mm-hmm.
which is based on last estimates is the fourth or fifth largest gold deposit in the Americas.
Mm-hmm.
Right.
Wow.
So we're working through some details on that. That's currently on care and maintenance.
Yes.
And the approach there, it's been a heap leach asset for a number of years. The approach there would be to work with all three communities. There's a two community agreement plan in place where
Mm-hmm.
we're advancing, assessing assessing a two community opportunity.
Mm-hmm.
And but really you'd want to work together with all three if you could.
Mm-hmm.
But it would lead to some exploration work, I believe, on the two community agreed plan.
Mm-hmm.
So Los Filos is not included in those numbers I just gave you.
Right. I
In,
understand that.
in addition, as we talked about, Castle Mountain, which would anticipate getting the approvals in the first half of 27 or potentially earlier because of the executive order. That, of course, that would then need some obviously additional infrastructure and construction work to be done on that asset.
Mm-hmm.
You're looking at another 200,000 ounces, sometime around the 2028, 2029 timeframe. So great growth within the portfolio,
And
right?
Los Filos, what might you see from Los Filos if that were to put, let's say with the three
Yeah,
community agreement, what if you could get
yeah.
that, what sort of production numbers might you be looking at Los Filos?
Based on a older technical report, I believe it was 22 or 23, maybe 21. It demonstrated an output of about 250 to 300,000 ounces a year.
Oh, yeah. So there's growth potential everywhere. You've got the best of both worlds. You got a producer that's going to get better. If Darren Hall is consistent with his past, he's going to make things, he and his team will make things better, more efficient, better margins, probably to a certain extent, to the extent
Yeah,
he's able.
there is that, Jay, and I think it would be remiss for me not to bring up the fact that the company does have a pretty significant debt load.
Yes, it does.
We're sitting on about 1.4 billion of term loan and revolver credit facility. There's about $350 million of convertible debentures that actually one of them is coming due in the first couple of weeks of September. So the focus of the company really at right this moment is optimizing the portfolio,
Sure.
potentially leading to divestitures,
Hmm.
maybe some smaller assets, maybe some higher cost assets that we don't see a clear line of sight to
Hmm.
optimization immediately. But I'm sure there will be that case. But I think the focus here is potentially shifting that strategy to let's look at possible divestitures to delever the
Sure.
business.
Yep. Yep.
Right. And then we want to get the company into a position, and Ross has been very adamant about this. He would love to be in a position to return capital to shareholders,
Hmm.
potentially between 18 and 24 months.
Mm. Wow. Yeah,
Absolutely.
that's pretty good.
Absolutely.
So, but you should be throwing off a lot of cash from your operations to help you reduce that net debt as well, right?
Correct. Correct. Well, exactly.
Have some
Exactly.
assets and what better time I would think to try to flog off some non-key assets than a time when gold is at $3,200, $3,300. And companies, smaller companies trying to get a start to get started there's probably a market for those things now. And maybe you're already looking into
That's
that.
right. That's right. No, absolutely looking into that. And we're here, Jay, for the shareholders. We are here as a financial instrument. Our product is an equity that trades on the stock market.
Hmm.
And obviously that goes up and down with the price of gold, but it goes up and down and the confidence is increased by the ability of management to deliver into those expectations.
Hmm.
And again, first and foremost, we're a financial instrument that is backed by the discovery, development, and delivery of gold production
Hmm.
and having a robust balance sheet. And right now, we're in a great environment where we're generating significant revenues.
Hmm.
And I believe over the next 6, 12, and 18 months, we're at a very important inflection point right now within this business, bringing on the new high quality Canadian assets, increasing that tier one jurisdictional output
Mm-hmm.
to be able to realize share price returns for our shareholders.
Mm-hmm.
Yeah.
We haven't really talked about Nicaragua. Obviously, you're shifting your emphasis to North America, but is there still upside potential in Nicaragua? I mean, I still recall
Yeah.
there was a lot of that in the hub and spokes, um, business model, and it seemed to me there was still an awful lot of exploration development upside there. Might we expect some good news from Nicaragua yet still?
Well, absolutely. I mean, at the beginning of the year, Calibre earmarked a 100,000-meter diamond drill program in country on our assets. And if you look at 24 and 23, continued year-over-year discovery and resource expansion success. So I absolutely believe there's tremendous upside opportunity there. And importantly, with the great effective hub and spoke strategy, we have 1 million tons of additional surplus capacity
Oh,
at the La Libertad facility, which
oh,
of course could lead to low cost organic growth.
sure. Of course,
And
you got to have the grades that will compensate
yeah,
for hauling and that sort of thing. But yeah, but you've had
like,
that. I mean, yeah.
well, average reserve grade on our assets in Nicaragua sits a little over 4 grams per ton gold,
Uh-huh. Uh-huh.
open pit and underground.
Uh-huh.
So these are low sulfidation epithermal veins, and what we've found so far, I mean, ever since I've been involved with the assets, El Limon and La Libertad is high grade, great metallurgical recovery material for
Mm-hmm.
either of these plants. So as we continue to invest in exploration, and I will say this, Jay, one of the things that I'm excited about is that I believe the company will be very focused on the current portfolio from a replacement of resource and reserve perspective and growth perspective, rather than acquiring new assets.
Mm-hmm. Mm-hmm.
We invest. Darren's strategy is to invest $100 an ounce on an annual basis
Mm-hmm.
for investigating exploration upside.
Mm-hmm.
So that means somewhere in the magnitude of $100 million a year.
Wow.
Well, this year alone, amongst the Calibre assets and the Nicaragua assets, we're likely to do north of $90 million of
Wow.
exploration.
Ah, interesting. Well,
Yeah.
you certainly have the upside exploration. That's what I see for sure. I was familiar with that in Nicaragua and at Valentine. I guess you also have some upside probably there at Greenstone as well. But you already, what's your life of mine there at Greenstone as it stands right now?
Well, the reserves are over 5 million ounces,
Okay. Yeah.
right? In the portfolio in total, Jay, the company has 23 million ounces of 2P reserves
Mm-hmm.
and 22 million ounces of measured and indicated resources.
Wow.
A tremendous opportunities.
Yes, indeed. Excellent. Well, I don't know what else there is. Anything else you can think of? We pretty well covered the biggest part of the story, I think.
A
Anything
lot,
else you'd like to say, and maybe in closing?
I guess in closing, this isn't all going to happen overnight,
Yeah.
right? We've got the team has a lot of work to do uh, to build the trust and the credibility. But people are, in this environment, people are looking for opportunities. They're looking for value inflection points.
Mm-hmm.
So I'm excited, but at the same time, recognizing there's a lot of work to do. And this is the mining industry.
Yeah.
You can have a lot of challenges that come up
True.
from time to time.
Absolutely. Mm-hmm.
So I would just ask that, people have patience with us. And I know people have had patience with Equinox, but I really see light at the end of the tunnel for some very good times in front of us to build a very successful company chaired by one of the most well-known mining entrepreneurs in this business that have created billions of dollars of wealth for
Mm-hmm.
shareholders, Ross Beatty. So
Mm-hmm.
I'm excited to be a part of that.
Good reason to be, and also with Darren Hall's background and his achievements, it's everything seems to be coming together. Ryan, I want to thank you so much for spending time with us, explaining this story, because it's my inclination has been to look at the little juniors, the guys that are finding the stuff in the ground, but I'm also interested in the producers, the guys can make it happen that can also expand and grow the companies. And this Equinox certainly seems to be one of them. So I want to thank you very much for sharing your insights and help our subscribers and people to understand more about Equinox. It's been very great. Thank you very much.
And well, thank you for inviting us on, Jay. And anytime somebody has a question or a query, they can go to our website, equinoxgold.com, and contact our investor relations and walk people through questions they may have. And happy to do that anytime. So thank you very much.
Wonderful. All right. Well, thank you. Well, that's it for this show today, folks. But later this week, I'm going to be interviewing the nuclear engineer who brought the attention of hydrograph clean power to me. He's going to explain why he's so excited about hydrograph clean power. So keep an eye on your inbox, from the Substack messages. Keep an eye on your inbox for that. We'll let you know when that interview comes along as well. Until then, goodbye and God's blessings to you.